Welcome to our next up alternative financing event. I'm thrilled to have with me Rachel Hirsch. We are going to talk about accounts receivable financing and also how alternative financing can help solve the capital gap for small businesses, especially during these times. Before I kick it off with the welcome and introductions, my husband and I have been spending a lot of time watching comedians in cars getting coffee. And I thought we'd do our own version today, which is women in finance with curly hair sitting by a fireplace. So hopefully that's okay, given the fact that it is the summertime, but we have moved upstate during these trying times, and we've been using our fireplace up until last week. So in all seriousness, in December, we at Next Street held an event basically to start the conversation with some of the fastest growing small business lenders and impactful community organizations on how to create a more inclusive economy. And at the time, we'd identified an $87 billion gap for small business capital. And the notion of bringing alternative funders into the mix to close the gap. So that was really the genesis of that conversation. And the meeting went very well. We had a lot of participants, and we were so excited about it that we were going to have something in the spring. And obviously with COVID, our plans got changed. But what I wanted to do for this conversation is to start by introducing myself and then Next Street, and then we'll turn it over to Rachel to introduce herself and Prestige, and we'll get into the mix of it. So welcome again. My name is Samantha Berg, and I'm a managing partner here at Next Street. I've been in the business of small business for about 25 years in a variety of capacities. I worked at banks, I had my own consulting firm, and now with Next Street. My focus has always been on providing small businesses access to capital, which is why I'm so excited to be here today. As for Next Street, I think those of you on the call today probably know it well. We are a mission-driven advisory firm focused on revolutionizing how small businesses access capital, customers, and services. We work directly with around 5,000 small businesses annually, but we also work with CDFIs, banks, foundations, corporations, and alternative funders to serve hundreds of thousands of small businesses indirectly every year. And we also have a particular focus on serving underserved communities and MWBE businesses, which is why I think the alternative financing conversation is very interesting. So without further ado, I'd like to introduce my guest for our inaugural Next Up alternative financing event. And that is Rachel Hirsch. Rachel, welcome.
Hi, thanks, Samantha. So glad that we have these lovely fireplaces in the dead of summer to talk in front of. And thanks everybody for joining today. We appreciate you joining the webinar. My name is Rachel Hirsch. I am the Sales Director North America at Prestige Capital. I've worked in the industry for 20 years. My background is actually sales and marketing. And when I got into this industry through a random sequence of events, I recognized that the conversation around financing and the type of financing that Prestige Capital provides is one that is not often understood. And so as a person who likes to communicate, I recognized that there was a gap in understanding and in knowledge. So my background, I like to write, I like to speak, and I put that to use in creating these type of conversations, normally in person, now on various channels such as this one. I was recently interviewed on a podcast and 2 TV interviews, and we will have notes about those later. But essentially, again, it's about educating and knowing what you need to know as a growing business and what all your financing options are. So thanks for having me today.
Great. And before we begin, I just want to mention again, if you have any questions, please add your questions to the Q&A. We're not doing live chat today, but we are doing live Q&A, and we'll try to address as many questions as possible. And so I appreciate all your engagement. So before we get started, what I'd like to do, for those of you on the phone, I have my own version of alternative financing and what that means. But I want to make sure everybody is working off the same definition of alternative financing. So alternative financing is broad, and it really covers nearly every type of lending outside of traditional loans, self-financing, government loans. It's inclusive of specialty financing, factoring, leasing, merchant cash advance, micro lending, online lending, crowdfunding, P2P, and more. These all fall under the alternative financing umbrella. But I will say that if you think about it, online lenders, even if they do offer traditional loans, very often come into the alternate financing umbrella just because they have a different experience up front. So without further adu, what I'd love to do is tell me a little bit about Prestige and what Prestige does, and why your product falls into the alternative financing and how it is different than other products.
Okay, thank you. Prestige is a 35-year-old finance company. We're based in Fort Lee, New Jersey, but we fund companies anywhere in North America with a sales size of $1 million in annual sales up to $250 million in annual sales, which is a tremendous, tremendous range. And the reason it is that sort of range is we deal with companies from very early stage to fast growth companies, to companies that get large purchase orders, to companies that are in turnaround, and to companies in bankruptcy. And I'll go into that, a little bit further later on. But what we truly are is we are immediate liquidity. We fund companies in 5 to 7 business days from receipt of an online application after they've spoken to one of us. And having the ability to have immediate cash flow is really the engine that drives business. So that is something that we're focused on, is, educating people about how quickly we can move forward. We are known as the most flexible finance company. My daughter at 16 years old came up with the tagline, "We are cash flow made simple," which really talks about what we do. And I have come up with another tagline, which is that we are like an ATM machine for invoices, because that's truly what it is. And if you take this concept and make it complex, people won't understand. But if you give them a visual, they will understand. And so that is what we do. We don't have a monthly minimum. We don't have the obligation to sell all your receivables. You can pick and choose what you're doing. There is no personal guarantee. And so I'm trying to make people more familiar with the concept that people often find daunting, and it's not really a complex concept. So bringing it down to earth is, what I'm about, doing these kind of webinars to educate people and let them know about their options.
So you mentioned options. I mean, I think when I think about alternative financing, I think it is different than traditional financing. And that's really what it's all about. It's about giving people options, and letting them know that financing isn't a one-size-fits-all extravaganza. So tell me a little bit about, during these times in particular, these extraordinary times, unprecedented times, whatever you call them, why is alternative financing even more important today?
So at this point in time, the banks are tightening up their credit. When you're lending money, you want to know that the loan is going to get repaid. But we are not a loan. We're an advance of your accounts receivable. So if you think about the concept of what it is, an account receivable is you invoice somebody for selling them your product or delivering a service to that customer. So when we buy invoices, we're buying invoices of a thing that already occurred. You sold a product, you delivered a service. Therefore, we have different kinds of criteria for looking at a deal than a bank who's worried about a company going under. And they won't get repaid on a loan. So we're evaluating the customers of my customer, and that's what we're focused on. Do we believe that that company will pay my client? And that's what we're looking at. So if you're selling masks to hospitals or to the state in this kind of environment, then I'm not worried about the state or the hospital going bankrupt. If you're selling to a retailer whose doors are shuttered, I may not be that interested in buying that receivable because I won't know per se that we will get paid. So it's a different set of criteria. I also know that a lot of early stage companies were not able to get the PPP loans. And so if you were a bigger company and more established, it was easier. If you're an early stage company that's getting your first orders, you may not have a wherewithal to fund it. The equity world has dried up dramatically, and many of my existing clients are talking about that they expected to have some equity that now they did not get, and they're utilizing us to fill their orders even more so than they might have before. We partner up with purchase order finance companies that also help do that. And so we are partners with all sorts of alternative finance partners to fund other assets other than the accounts receivable, which is the part that we focus on. So we are a good partner to know, and also partner up with all kinds of advisors to help businesses get to the next level.
So it's interesting during these times that, this is an interesting alternative. If we can go into it a little bit more, you mentioned something about how accounts receivables work and the types of products that you're the types of things that you're buying in order to help them get funding. Can you elaborate a little bit more on that?
Absolutely. So I'm going to kind of describe the process by which we provide funding and how it actually works. So let's just say a company sold $100,000 worth of a food product, let's just say Whole Foods, and they need to pay their supplier immediately or within 5 days or 15 days, and they're not going to get paid for 45 days. So if they're introduced to us by their banker or their lawyer or somebody else in their ecosystem, we're going to evaluate, is the credit worthiness of Whole Foods good? Can we have a first lien on the assets of the company that we are providing the capital to as our collateral? And, will the receivable pay within 90 days from the date of the invoice? And that's really what we're looking at. We're also looking at the background of the owners of the company to make sure it's clean and that they have a good character. So that's some of our background work. But once we hit those three criteria, then what we're doing is we are buying that $100,000 of invoices. We're making an immediate advance to the client of 75%. So in that example, $75,000. And then we hold that 25% reserve against any offsets or deductions that may occur against getting paid in full. And when Whole Foods pays that invoice, they actually send the payment directly to our lockbox at Prestige Capital. And then once we receive the payment, if they did pay in full, then we release that reserve of 25% minus our fee. And the fee comes out of the back end and the client gets the difference. And our fees vary depending on the size of the deal. So, a larger deal might be 1.25%, a small deal might be 2.25%. And that would be a discount of the receivable for, the first 30 days. And then it rises by a third of whatever your starting fee was for each 10-day increment that we're waiting for money. The beauty of our program, though, is that we don't make clients sell the receivables right away. They can hold on to it. They can sell it to us anytime within its life cycle. And when they start taking the funds, that's when the fee begins. So many companies that are in our ecosystem in the factoring world, they require that you sell all your receivables. They require that you sell them from the very day you create them, and they charge you from that first date. And at Prestige, we really say, why is it like an ATM machine? Because until you put your invoice through the slot, so to speak, you're not charged anything. So when you need money, you determine what day you need the money. You put the invoice through, we confirm it, and once it's confirmed, we forward you the money, that advance rate. So it's 75% on a product business. It's 80% on a service business. We finance a lot of service companies. So it could be, companies that in this environment are cleaning offices or cleaning hospitals or anything like that. And also it can be technology companies of all kinds. In this day and age, we have companies that do AI and IoT and all sorts of things like that. So we're industry agnostic, and we are always looking to speak to companies who have business-to-business receivables. We are well versed in all industries, and what those receivables look like and what questions to ask. So if a client is introduced to us, we're very well versed in all the industries that are out there that need capital.
So we actually have a question from one of our participants, and I should mention that we have both partners as well as small businesses on the call today. The question comes from Peter. Does the account receivable product work if the company is a startup?
Yes. So for us, we don't look at how long the company is in business. If a company opened its doors and has a certificate of incorporation and they're selling their product or service to a legitimate entity and they have at least $100,000 of accounts receivables, we will absolutely talk to them. Very often, early stage companies, sometimes they're a reformation of an existing business where partners split up and then, new people came into the fold. And oftentimes it's an early stage business that just formed. Maybe they were in research and development for a while, and now their product is rolling out or their service is rolling out. So there is no length of time in business requirement.
Great. So you've been around, Prestige has been around for about 35 years. But, more and more we're hearing a lot, sometimes good, sometimes bad, about alternative financing. I know, some of the partners that we have on the phone have had mixed experiences with alternative financing, but yet alternative financing continues to take off, even though it tends to be a more expensive product than, let's say, a government loan or a bank loan. I would love to understand a little bit why you think this product is actually taking off and why you think it's interesting.
Yeah, so if a company is able to walk into a bank and get a low interest loan, that is usually the first option. If they can't, and most banks, require 2 years in business, 3 years in business before you can obtain a loan, then getting financing from a company such as Prestige is a great option. One of the things I counsel many early stage companies about is the fact that they all heard they should get equity. That's not necessarily true. When you're an early stage business, and as anybody who watches Shark Tank knows, they want to know what your sales look like. If your sales are low and you give up equity very early, they're not that interested and you're going to lose a big piece of your company. If you go and finance your business with a company like Prestige and you have greater and greater sales as a result of that, because we're turning a spigot on for cash. So if your sales are growing and you went from $1 million in sales to 2 million to 3 million to 5 million in a year, and then you look for equity when you're a $5 million company rather than one, you're going to get a much better valuation. So you need to know where you are in the ecosystem and what is the right kind of financing at any given time. One of the things that I love to do is talk to early stage companies, sometimes before they're too ready, they're too early for me, but to give them the roadmap for success of when they should be calling me, what they should be doing in the meantime. I've partnered with banks for the last 20 years. When I started in this career, I went door to door to every bank and basically said, when you turn down companies because they're too new, what do you do with them? And they said nothing. And I said, well, if you introduce them to me and they have business accounts receivables, I will fund them. You will have a deposit account. And then when they graduate to your type of financing, meaning that they can get, less expensive financing after a number of years, you will have a steady client with a good cash flow and good growing business, but I will have created that growth for you. So my partnership with banks goes back 20 years. I am, so proud of those partnerships, and I work so well with so many of the banks. And they appreciate the fact that the person they have to turn down, which is not an easy and pleasant thing to turn somebody down, that they have an alternative person to go to, an alternative company, where they know that I will hold that client's hand. And even if they're too early for me, I try to position them by introducing them to partners that I work with that could be advisors to them and give them advice. So that's how, we like to operate.
Yeah, and I think this world of alternative financing is very broad, as we discussed, and there are a lot of players. And for banks, it's important, and for CDFIs and other financial institutions that are lower cost, it is important to know who the good players are to go to and to understand what kind of service experience they're going to have when they go to you. We do have another question. It is from an anonymous attendee. It asks, what if it's a Mexican company, but the AR or invoices are from a Fortune 500 company?
Okay, so Prestige Capital specifically finances companies in North America, and the client can be anywhere in North America. So the company that we are funding can be Canadian with receivables that are from Canada or from the US, and they could be a US company with receivables from Canada or the US. But we don't finance foreign companies, and we don't finance foreign AR. And to that point, as I talked about earlier, we have many, many partners that fund alternative types of things. And one of those partners funds foreign accounts receivables. So as my bankers know, and all the advisors that send me business, they know that I'm not the answer to every question, but they know that I will lead them to the answer to any question. So they say, I know you probably don't do foreign AR. Who should I reach out to? Or I know you don't do equipment financing, but who should I reach out to? I know you don't do inventory financing. Who should I reach out to? Now, on many deals, we do partner with alternative financing sources, because if the deal needs other components financed that are not just accounts receivables, then we partner up and create what I call we quarterback a quasi asset-based lending deal. The broader term for what we do is asset-based lending. So asset-based lending means there's an asset, whether it's an account receivable, whether it's your inventory, whether it's your order, whether it's your equipment or your real estate, and we are doing one of those components. Sometimes the deal survives on just the receivables, but sometimes you need to fund the inventory. So we pull in our other partners, and together we team up to do the deal together. So back in December of this past year, we were introduced by a turnaround management company to fund a company in the consumer product space. They had had losses because they were a licensed brand and they lost one of their licenses. So their existing bank asked them to leave, and there were 10 million of receivables and there were $12 million of inventory. So the intermediary thought he couldn't work with us. He said, I can't work with you. You don't do inventory. I said, yes, but my partners do, and we come together to do it as a team. So show me the AR and send me the inventory list. I will bring in my partner. We were able to close that deal in under 10 days. And that's unheard of in this world of alternative financing and of doing a complex deal with more than one partner, where we had have an intercreditor agreement between us, which is a legal document. But that's what we do. We close deals quickly. We're a sophisticated team. Everybody's there for a long time at Prestige. I'm there for 13 years, which is a very long time to be working at a specific finance company. And it's because as a team, we come together, we get things done. We know what deals look good for our program. If they're not good, we know who to refer it to. And if we're interested, we jump all over it, and we fund companies quickly and painlessly. If you look at the testimonials on our website, the clients love it, because we make a complicated process very, very simple. We have a 4-page application, which is online, and we have a 4-page factoring contract, which is very, very short. So everything is about simplicity.
We have another question for you, Rachel,
Yep.
from Richard. And the question is, will you lend against royalties receivable?
So it depends on how it's structured. We actually had a fashion designer who licensed her name to retail, and she got paid, under a contract where every, 90 days she'd get a statement of what was owed her for products that, passed the register of her licensed product. So we did finance that. So we will look at unusual transactions if at the end of the day it can be deemed an accounts receivable, and that at the end of the day, all the other criteria are met, having a first lien on assets, that sort of thing. One thing I'd also like to point out to any bankers that are on this session with us is that we often work with banks when a client gets a large order and the bank doesn't want to increase their line in order to finance it. So the bank can do something called a carve out, which means they're carving out this particular debtor out of that whole collateral pool and allowing Prestige Capital to fund that invoice to give the client the cash flow they need to pay their supplier or whatever it may be. We worked with one of the banks last year. They carved out a $25 million order for us to fund, which was an Amazon invoice, and it was for an AI product. And we've done it on different consumer products with all the banks that we work with. And it's a great tool for a banker when you can't help the client or don't want to know that you have a partner that you can call and let us in on a particular debtor and fund those transactions without having a risk to your own loan.
I want to bring the conversation back a little bit to sort of the current times. There are two things that I want to talk about. The first is there are a lot of companies that are strained during this time. We're seeing bankruptcies that we haven't seen before. And I know you and I have had a conversation prior to this. Tell me a little bit about companies that are going through bankruptcy or have had bankruptcy and how that works with your product.
Yep, good question. Thank you. So our company was founded 35 years ago by Harvey Kaminsky, who's a bankruptcy attorney. And as such, doing what's known as debtor in possession financing, or the acronym is DIP financing, is something that he understood very well, and is one of the tenets, that we were founded on, is that we can finance companies in bankruptcy very quickly, once we get the financing order from the court and so on and so on. So knowing how to do that and how to excel at that is one of the unique properties that Prestige Capital has. There are not that many finance companies that do that, or if they do, they don't have the expertise of what we've done for 35 years. And having the ability to do that, I think, is going to be a big cornerstone in the next couple of months, or however long it takes for all of that to really move forward. I've spoken to a lot of bankers who work in that kind of division at the bank, and they say we will probably hold tight and not do anything, but within 6 months we will have to do that. Have certain companies leave our portfolio, and those companies will likely file, and we will likely come in, or they won't file and they'll be in turnaround, and we will finance them in turnaround. So having a company that does not look at your financials and doesn't care if you're profitable, and all we care about is, are your customers creditworthy? Are your transactions valid? That's what we're looking at. So we expect that it will be even more active in the turnaround and bankruptcy space. Right now, we're actually very active in doing acquisition financing, as older businesses are fatigued. If it's a family-owned business and you are the second or third generation, and now this crisis hit, you just don't have the bandwidth to continue. So a lot of them are selling. And the new owners, are putting in some money, but then are looking to have additional capital. So using the receivables of that target company in order to acquire it is one of the things that we do. And just working with companies that are getting large orders. I mean, we've seen a lot of deals in the PPE space with the virus. Some of them were fly-by-nights that just jumped on the bandwagon, which we did not fund, but some of them were established businesses who suddenly had tremendous orders that were outside their scope. And some of them, needed us just to fund the receivables so they could pay a supplier, and some of them needed us to introduce them to our purchase order finance partners so that together we can team up and do it. And again, we fund deals in 5 to 7 business days, which is incredibly fast in our industry. And it's what's made us best in class.
Keeping on the theme of the current environment, there's a tremendous focus on Black-owned businesses and Latinx businesses.
Can't hear you, Sam.
Can you hear me now?
Yes.
Okay. Thinking about the current environment, just there's a lot of focus on Black-owned businesses, Latinx businesses, immigrant businesses. I'd love to understand, is this type of financing good for these underserved businesses? Because there is such a need. And going back to the $87 billion gap that I referenced in my beginning comments, and that gap has probably widened since we published it.
Can't hear you. Speak up a little bit, Sam.
Sorry. Good?
Yep.
Yeah, just going back to the $87 billion gap, and So many of those businesses that aren't getting funded are Black and Brown owned businesses. How does your financing help bridge the gap?
So, we're equal opportunity financing. Our clients are every nationality, and a lot of women-owned businesses as well. Many of our clients are minorities of all color, and we don't look at that. When an application comes in, we're running somebody's background. We are looking at whether they have any liens in our way. But we are an equal opportunity finance company. And, when people do go to our website and look through our testimonials and look through our case studies and so on and look up who our clients are, they're a roster of everybody and every color and every race and creed and so on. And for myself, one of the things that I put out to the universe this year is that as a woman in business, I did not have a lot of female-owned businesses, not because we wouldn't finance them, just because, they weren't being led to my door. And I started speaking about, helping women-owned businesses and putting that conversation out there. And now we have many, many female-owned businesses and helping them grow and connecting them with one another, because female founders, they often don't get a seat at the table. And so if they're going around shopping for, equity, and nobody wants to talk to them, and they have a great product and a great idea, if they fund their accounts receivables, and I help them grow, not just by financing them, but also by introducing them to strategic partners who are advisors who might help them get into retail or might help them get into a subscription box where they're selling their makeup or something like that, and connecting them to one another, all of a sudden they're growing very quickly. So case in point, one of my clients was selling to one of the subscription boxes, which was FabFitFun, and another one was selling to another one, which was called BoxyCharm. And I put them in touch with each other, and now they're cross-selling to the other box. So that is so rewarding to me, because without that connection, they wouldn't know who to call at that box to sell their product. I created a little networking group of some, people in the consumer products industry, and they are connecting the dots, inviting me to speak, inviting each other to speak, doing IG live events. I had one of my colleagues be a speaker about the future of retail on one of my calls. So it's about education, it's about connection, it's about understanding who in the ecosystem that I know can help any one of my clients, any one of my advisors. And connecting the dots is, part of my job that I love. So
We do have a question from David on any data on the non-white male percent approvals versus applicants. I'm going to answer this, but feel free to tack on, Rachel. I know that alternative funders in particular are not able to capture this data. In particular, that it is based on a different credit box, as we talked about, and that is based on criteria. So for example, in the case of Rachel, they're looking at the client's customers. They don't care where you live. They don't care about the color of your skin, which is why I think this product in particular is very interesting, and the alternative funding space is interesting. But Rachel, please add if you have any data. I haven't seen any on this specifically, although talking with alternative funders, I would say that there is a disproportionate amount of non-white and women who are approved versus other funding sources.
yeah, and as I talked about earlier, we are not looking at that. When somebody sends in an application, we don't know what race they are. We don't care what race they are. We care about, if I look at your personal credit history, is it clean? If I do a criminal background search, is it clean? And that's what we're looking at to determine a character of a person that we're about to do business with. So, and very often, from a name, you don't know what that is, right? And we don't care. So we are non-discriminatory. It's something I'm very proud of, because social justice and equality is a big, passion of mine. And, I've been participating in the marches personally and all that. So if I were working for a company that didn't have integrity and didn't align with my values, I would not be working there. So having a company, where our employee base, by the way, is very diverse. you know, our account executives and our whole team is not, you know, all white and is not all men. So we have many more women actually in our company than men, which is a lovely thing as well. So thank you.
So in terms of today, tell me a little bit about what you're doing to help small businesses respond. And are you doing anything different than usual?
So I think what we're looking to work with these companies on is, as always, to advise and to listen, right? You know, what is your pain point? What is your issue? Some of that in this environment is that their customers are paying slower, right? So in the beginning, you know, one of our clients in the consumer product space selling to TJ Maxx, TJ Maxx then puts out an edict saying, we are going to be paying you 30 days slower or 60 days slower. We have to determine whether we're still funding that. So we look at, you know, who are your debtors? Do we feel comfortable? You know, can we go out further? Can we extend terms? I just got a referral from a bank on a pharmaceutical company. You know, they're going to pay in 120 days instead of 90 days. Are we comfortable with that? So, you know, we will entertain things like that. And being, you know, a company that has flexibility now and always is important. And I will go back to, you know, other troubled times in our history. During the 2008 crisis, during 9/11, when most companies in the finance industry shut their doors to new deals, we were really, really active. We say we are the type that run into the fire. We don't run from the fire. And we've seen that to be true. Say that again?
I said, hopefully with fireproof protection.
Yeah. So, you know, we're always looking to understand what a new time period, what are the challenges, and then we brainstorm about how we can help businesses. Even doing these educational conversations is so important. And then people sharing them with their colleagues and posting them, I think it's important. You don't know what you don't know. That's the biggest problem, is that, you know, when I joined this industry, and I don't have a finance background, but logically I'm like, why is this a product that's so helpful, never talked about? I speak to so many people in the finance industry, and I go on their websites and on their portals, and they don't even have a section about asset-based lending. And I said, that's a disservice to the people on your portal. If they don't know there's a piece of financing that they can qualify for and grow their business from very, very rapidly, how is that helpful to them? So that's always, and right now, like any time, you know, it's that we have this proven track record of success, that we are caring individuals who listen, who pivot. We advise our clients, you know, don't step out of the thing you do just because there's a crisis. Figure out what will work for you. We're here to help you. We're here to connect you. But make sure that you understand, you know, that your core business is your core business, and don't pivot too far just because there's a crisis. Yeah.
So you answered my last question, which is, what advice would you give to small businesses? Anything else that you want to add to that?
I can't think of anything specific. If anybody has questions, I'm happy to answer them.
All right. Well, before, if we see any additional questions, we will certainly add to them. What I would say is you're welcome to email me, Samantha Berg, and my email address is sberg@nextstreet.com if you have any questions on this webinar. I also want to give you Rachel's information, so you can contact her as well, but I will have Rachel give you her own information.
Thank you. So I can be reached by email at rhirsh, H-E-R-S-H, at prestigecapital.com. I also invite you to visit our website, which is quite robust. It has a lot of information in our newsroom, which is the podcasts and the TV interview and articles we've written and press releases. It also has case studies of companies broken down by industry, broken down by type of financing that we provide. We have lots of testimonials there. If any attorneys are listening to this or any accountants listening to this, I also do CPE credit classes and CLE credit classes for your firm, and we have testimonials from both accounting firms and law firms about that specifically, so you can certainly reach out to me to discuss that in greater detail. And if you would like me to, chat or speak at any event or group that you're a member of, or to speak to your team if you're a banker and have a team, that's what we do. It's all about communication and education. So my pleasure to help.
Rachel, thank you so much. I realize this was not as funny as comedians and coffee, but it's a very serious and important topic. And I'm grateful to have on my inaugural Next Up Alternative Funder event, another woman with curly hair and also a friend. Thank you so much for your time today, and for all the participants. Don't hesitate to reach out. We're here to help. Our business is the business of small business, and we want to see you not only survive these times, but thrive. Thank you for your time.
Thank you. Thanks, Samantha. It was great chatting with you today. Thanks, Katie, for all your help too.
Take care. Thanks.
Take care.